%, despite warnings from the Crown Prince in Saudi Arabia over the weekend about what could happen to oil prices if there isn't collective action against Iran. Markets largely shrugging that off, and we've actually seen a drop in the oil spot price today. Telco's now taking the bottom position as we warm up for the session, trading down by about 0.25%. KPM, the weakest stock in that basket. Travel and leisure managing just to push a little bit higher, but still a weak trade this morning, sliding by about 0.1%. Some of the better ones in that basket, though, the likes of Air France, EasyJet, just picking up and moving into the green at the start of the session. In terms of other sectors, autos, media stocks, a little bit weak. Technology also in the mix of weaker stocks. This was to be expected in technology, given the very weak showing on the Nasdaq on Friday, as we saw it very much undershooting, underperforming what we had for the other major indices. In terms of other stock sectors, what we've got, industrials on the flat line, very trade exposed basket. So investors closely watching the language from the White House this week around that messaging around China on capital markets in particular. Banks trading up by about 0.1%. We've got real estate, basic resources, utilities, all in the mix. So it is a little bit defensive on some of these areas that are moving into the green this morning. Let's move on to the indices and see what this means for the major markets. It was a fairly interesting week for the FTSE, one of the ones that actually managed to move into positive territory. Some of that, though, with that correlation to the pound, as we saw the pound grind a little bit lower on some of the politics and Brexit. It was the supportive factor for the FTSE in 7429, the level that we're now trading at, holding on to last week's levels. But the other major markets, you can see mostly drifting just into the red for the French market, the DAX, the Italian market flashing up down by about 0.1%. Still patch of green, though, for the IBEX, which has managed to eke out a slight gain in contrast to the rest of those European markets that are having a fairly cautious start to this session. Shares in AB InBev's Asia Pacific business have jumped on their Hong Kong debut. The brewing giant raised about $5 billion in the world's second biggest IPO this year after it priced the float of its Asian division at the lower end of its projected range. The company initially hoped to raise more from the listing than earlier this year, but shelved those plans in July. And of course, what we had on the stock price today in Asia was firmer, but the overall parent today trading lower by about 0.4 in contrast to that 4.6% pop now on the share price of Budweiser Asia Pacific. Meantime, to the threat of trade wars, the World Trade Organization is poised to back US trade tariffs worth billions of dollars on a wide-ranging list of EU goods, according to media reports. The arbitration ruling marks the latest development in a 15-year dispute over European subsidies given to French plane maker Airbus. You can see flashing up slightly green now on the flat line. So the market watching and waiting for tariffs on this company. But more broadly than that, we are expecting a whole range of other products to be targeted, from cheese to yogurt to olive oil, and also potentially luxury in Europe. So that is an area of the market we're watching closely. You can see a bit of a patchy old trade, the likes of Kering in the green, up about 0.1%. In contrast, bit of a drop for LVMH, and you can see Swatch trading in the green. So let's go to Willem for more in Brussels. Willem, and it is an extensive list that the Americans have drawn up, giving them plenty of options if they go forward with retaliatory tariffs on some of these European goods.
Yeah, that's right, Karen. Back in April, the US Trade Representative's office released a provisional list worth around $25 billion worth of EU goods. That was split into two parts. The first part was focused mostly on civilian aircraft, helicopters, cargo planes, undercarriages, fuselages. And then the second part, as you started to mention there, things like cheeses, yogurts, potentially even luxury leather goods. And that 25 billion will theoretically be drawn upon if the WTO Arbitration Tribunal allocates a certain amount of countermeasures that the US can impose on the EU for these years of launch aid subsidies, as the US calls them, for Airbus. Now, what that could mean in practice is that once this ruling comes out, once it gets formally adopted by another panel at the World Trade Organization, the Dispute Settlement Board, it then becomes actionable. At that point, the US could impose those tariffs, but ultimately that will be down to the advice that Robert Lighthizer, the US Trade Rep, gives to President Donald Trump and decisions that President Trump makes. Going forward, months from now, we could see a similar decision from the WTO, once again, against Boeing and the United States. So there is an incentive for these sides to come to some kind of negotiated settlement. And just to bring you some of the comments from both sides ahead of this ruling, we've heard already from the European Commission that the EU has, as recently as July, submitted concrete proposals to the US to which there's been no reaction so far. They say the EU's willingness to find a fair settlement remains unchanged. Meanwhile, at the start of this month, the US ambassador to the EU, Gordon Sondland, he said that there had really been nowhere in terms of settlement, that talks had gone nowhere, to quote him specifically. And so it does seem like there is a very strong possibility the US will consider these tariffs. That's something that is very much in line with the Trump administration approach to trade. And of course, this comes off the back of many years of US complaints about these launch aid subsidies to Airbus and the failure of the Europeans to fall into line once those rulings were made, going back to 2011.
Willem, we had Douglas Yates on the program earlier, who is a professor who is focused on how President Trump has, I guess, negotiated his way through the trade story with China and the agricultural position with Japan. He's a president emboldened by what he perceives to be some success. But more importantly, Douglas Yates was suggesting that the threat of impeachment at home will steal his will when it comes to Europe at this stage. Are you hearing anything over in Brussels where perhaps some of the negotiators are wondering how they take on a President Trump who is focused on appeasing a domestic agenda?
Well, you go back 6 months, which is when the European member states, Jeff, gave the European Commission a mandate to begin these trade talks with the United States. There was essentially two separate tracks to those talks. One was trying to remove all obstacles to trade when it came to industrial products, and the other was trying to find more common ground when it came to technical regulatory compliance for products produced by companies on both sides of the Atlantic. Those talks have really not gone anywhere. And so that theory that Douglas Yates is proposing, the idea that the US is otherwise occupied and might not be looking inside the White House for a new front in a trade war, does hold some water based on the evidence there in terms of there being not a huge amount of movement. But of course, the ruling that we're expecting as soon as today from the World Trade Organization, the possibility that President Trump might want to distract from some of his more challenging domestic situations, could mean there's an opening for fresh sets of tariffs. It could mean allow him to change the storyline when it comes to the US media in particular, and potentially also international media. And of course, the European Commission, although they don't want, they say, to engage in tit-for-tat tariffs, it would be very difficult for them to stand by and allow their major aircraft manufacturer and other products that have nothing to do with the airline or aircraft manufacturing sector to be targeted without themselves finding some kind of need for retaliation once the WTO rules on the amount that they themselves can impose as countermeasures.
Willem, thank you very much indeed for that. We'll come back to you a little bit later on in programming. Sunil Krishnan joins us, head of multi-asset funds at Aviva Investors. Sunil, good morning to you. Welcome. Good morning. Let me ask you, we closed out Friday with this unusual situation, actually, where European markets managed to close out positive, and the United States ended up in the red. This morning, as we come into a trading week with all of these stories flying around, how risk-on do you think investors should be?
I think it's not a surprise if you go back to Friday to see that range, really just because of the timing of how news broke out. So it was more during the afternoon of Friday that we learned a little bit more about some of the potential actions that are being explored in the US and so on. So perhaps not a surprise there, and perhaps we'll see a little bit of give back today. I think you take a step back. The broader pattern is one that we've now been in for probably 12, 18 months of a gradual, if you like, tightening trend or difficulty in terms of the path of US-China trade relations. And in that regard, at times things seem to be a little bit better, at times they seem to be a little bit worse, but overall the trend has kind of not moved in the most promising direction. And I think that background remains. I mean, exactly what that means for the Open today, who knows? But in terms of further ahead as we look through the week and coming weeks, I think we can expect those sorts of challenges to kind of stay with us.
But the underlying structure of the market and the supports have changed over that period. And as we look at the Nasdaq, which has been a key driver of returns for global investors over recent years, we're now looking at a market that's sitting below its 50 and 100-day moving average. This hasn't happened for some time, that we get both the Russell and the Nasdaq, which is the sort of small cap world, a corporate world that is really struggling to make any profit at this point, but also the Nasdaq, which represents those high flyers that have been the pillar of support. How worried do we need to be that represents a meaningful shift now in market sentiment running into year end?
I think it does have meaning. If you look at the support that's been provided to markets, which at times have seemed extremely narrow, really focused on a small number of stocks right at the top of the S&P 500 in the US, I think for sure. It's a meaningful shift when that becomes less apparent. We have seen small episodes like this through the piece, but as you say, I think there's tended to be a degree of rotation among stocks, and maybe those are the times when some of the value stocks or smaller stocks have done better. So to see both of those extremes pulling back, I think is something that's worthy of attention. I think a large chunk of it is investors just becoming more discriminating. And if you can tie this also into the less than warm reception for some of the potential IPOs in tech space, the fact that weaker balance sheets in the Russell, for example, have been underperforming stronger balance sheets, and I think active managers are kind of finally starting to flex their muscles at a time when the question has been, are they completely outweighed in their effects by passive investors?
The commonality here, it's the end of the party mentality, isn't it? Where investors are saying, well, the good times have gone on for long enough, and we think that there will be an end point down the track. Just when that is the question. And so do we want to go into that holding companies that have too much debt? Big growth stories for these new tech players also coming to market, but they're no out as to when they actually ever turn profitable. So Masayoshi's son also pushing back against that last week. Are you worried about shielding the portfolio at this point for that end of party type of mentality? Is it time to take some positioning because we may not be here forever in the good times?
I think protecting portfolios against that possibility has been on our minds for some time. So I'm not sure that today is a major kind of turning point compared to Friday or last week.
Which is funny because some people still think we're mid-cycle, so you think we're much further down the track than if you're protecting your portfolio.
Well, I think as multi-asset investors, we're always trying to look at ways to balance out risks. You never want to kind of pin it all on your central case and that being rosy. So I guess what really changes is what risks you're looking to protect the portfolio against, what opportunities you see, and how that might shift. So, for example, there haven't been, if I think back to, for example, in July, was that a very attractive time to protect portfolios against economic downside through the Treasury market? Perhaps not. We'd seen quite an aggressive decline in yields. But if you look at yields today, we're now some way above those lows, and that looks somewhat more attractive. So in portfolios for us, you look at, for example, 30-year Treasury, that does quite an important job for us in terms of protecting against potential disappointments to the equity market. But that won't always be the case, so we need to kind of continue to look around for the opportunities. If the concern is economic growth, then naturally your mind turns to the Treasury market or maybe more defensive markets within equities.
Through September, though, it didn't feel like the end of the party at all because it was value that outperformed growth, right? Japan was the best performing market, followed by Europe, and US was a distant third. So I'm wondering, do you think this factor rotation is for real, that we can actually see value outperforming growth now as a matter of trend, just because we've seen exactly the opposite for several years now? Is this the beginning of the end for growth or the beginning of value?
I think almost regardless of how you're positioned, that was a really critical question. I think everyone who makes allocations within the equity market noticed, either for better or for worse, and I think you very much have to have that challenge. And certainly we know that if you look, for example, at valuations between the two, they are at very large gaps by historical standards. Having said that, I think the history suggests that value needs to have something of a macro tailwind versus expectations. And I think one of the real difficulties that I have with seeing a sustained value rally from here is that neither do I expect a significant acceleration in the economy, nor do I when I look at, for example, the S&P near all-time highs, nor do I see the kind of depression in terms of sentiment that would allow even a stabilisation to kind of give us that uplift for value. So for me, I'm not sure we're quite there yet.
All right. Sunil, you're going to stay with us. We'll come back to this conversation in just a moment.
Let me take you back to some of the market action as we watch shares in Kloeckner trade down by 4.7%, fairly significant fall on the back of some news flow, all in a report that it has supposedly ended merger talks with ThyssenKrupp. According to German newspaper Handelsblatt, the metals company made the decision following Guido Kirchhoff's dismissal as ThyssenKrupp CEO. The two companies had been in discussions over a tie-up in materials trading. You see ThyssenKrupp shares down 0.4%. Let's switch over to Credit Suisse and take a look at the stock today, which is higher by just over 0.6% in contrast to a flat trade for UBS. Members of the board of Credit Suisse are reportedly backing CEO Tidjane Thiam amid the fallout from a corporate espionage scandal, according to the Financial Times. The Swiss lender remains under scrutiny after it was revealed that the company hired a private investigator to follow the former head of its wealth management unit, Iqbal Khan, who this week is due to join rival UBS. It said that Credit Suisse was worried that Khan would poach clients and employees. Now, several media reports suggest that a board meeting is taking place today. Credit Suisse has declined to comment on the reports. Meantime, to Woodford Patient Capital Trust's net assets, which dropped 14% in the first half. The investment manager blamed the fall on biotech company Autolus, which is one of the largest portfolio holdings. Its shares have been volatile since it listed in 2018. Jeff.
Thanks very much, Karen. President Trump's team prepared to fight back. We're going to talk some more about how they view the impeachment inquiry. We will have that story. Plus, we'll speak to Chicago Fed President Charles Evans. That is the first on CNBC at 9:30 CET.
Buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel-good car buying, all in one place.
Carry on to findandfundmycar.com.
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
At the Bank of Antandek, mortgages are on the menu.
I was in the chippy last night and it hit me.
Go on.
We should give all our new mortgage customers £1,000 of spuds.
Potatoes?
Yeah, jackets, roasties, dauphinoise. I mean, what's not to love?
Hey, yeah, we could call it Mashback.
Genius.
Meanwhile, at Santander, they're giving their customers £1,000 cash back on selected first-time buyer mortgages. See what's possible at Santander.
Lending subject to status and criteria. Cashback given on completion and repayable if mortgage closed within 2 years. Offer can be withdrawn. Your home may be repossessed if you do not keep up repayments on your mortgage.
Our toy rollback is now on at Asda with hundreds of toys to choose from, like the Paw Patrol Mission Cruiser was £44.97, now just £30, and the Barbie Ambulance was £49.97, now only £30. Perfect for treating your little princes and princesses. Bring it home with Asda. Selected stores online, subject to availability.
You're a small business owner and there's nothing small about what you do. That's why Dell Small Business Technology Advisors give you trusted advice and tailored tech solutions, like computers with Intel Core processors, servers, storage and networking, plus industry-leading monitors and software. No matter your technology needs, Dell is here to help your small business do big things. Call 0800 085 4878 to speak with an advisor today. That's 0800 085 4878.
The anonymous whistleblower at 50% of the impeachment inquiry is likely to testify behind closed doors as early as this week, according to Adam Schiff, the chairman of the House Intelligence Committee. Schiff told NBC's Meet the Press there was a, quote, real risk in not moving forward with the probe and that he hoped the whistleblower would testify very soon. This as President Trump and his allies work together to launch a fight-back plan. Meanwhile, President Trump's personal lawyer, Rudy Giuliani, has told Sky News he would be willing to testify to Congress and defend the president.
The president didn't do anything wrong. The president didn't do a darn thing wrong. When you look at that conversation, there's no threat. There's no quid pro quo. There's no mention of money. If you want to interpret something, well, I can't stop you from interpreting something. That's called like making it up. It's either there or it isn't there. It isn't there. I have no fear of that. Do I have a fear that the Democrats might vote for something?
That's what I'm asking.
Yeah, it'll get voted. It'll never get through the Senate, and they'll kill themselves if they do it. I mean, it's stupid politically.
The U.S. Treasury Department says it has no plans to block Chinese companies from listing on U.S. exchanges, quote, at this time. That's after investors were rattled by a report claiming the Trump administration was discussing methods for the financial decoupling of U.S. and Chinese markets, including forced delistings, limits on pension fund investments, and caps on the value of Chinese stocks in U.S. managed indices. And we should point out there has been a response from the Chinese government on this, the Chinese Foreign Ministry effectively warning of the risks of decoupling. Just very similar, I think, Sunil, to some of the tit for tat that you were discussing earlier around the trade story. Let's pick up and then maybe focus then on where potentially there may be some opportunities in markets. I've noticed a change in tone around Europe and around European banks over the last couple of weeks. I don't know whether it's part of that opportunistic value trade that you were highlighting, Banu, or whether we can actually see some evidence of some very early green shoots of recovery in Europe that will be positive for the banks. Is that hope over expectation? Hope over reality? How do you see it, Sunil?
Well, I mean, in terms of green shoots that you would typically think might support banking from a volume perspective, I mean, actually, domestic demand in Europe has actually not been too bad for some time. So probably even through most of 2018, domestic demand in Europe wasn't really a major challenge. We knew about the export challenges, and they remain. If anything, they're probably getting tougher rather than easier. And then if you add to that, so a reasonable kind of domestic macro backdrop, which isn't improving materially, but probably isn't getting much worse. Some challenges in terms of export and export-sensitive areas, and then the questions of margin and balance sheet quality. I think perhaps for investors there was some sense that a recognition from the European Central Bank that tiering would be helpful in terms of sustaining the recovery may have provided a little bit of relief for banks on margin, but we need to look at that hand in hand with a policy that's been specifically designed to give more flexibility on more negative rates if required. And commentary to say, look, that is part of the toolkit. So I think if you put that together, it's hard to say that margins will clearly become a major improving story for European banks. And then the last part is the question of balance sheet quality, which really ties just more generally to macro activity. And there, while we don't at this stage see a collapse, it's hard to see when you look at, for example, the continuing weakening trend in PMIs, it's hard to see that balance sheet quality, the companies that you lend to, are going to significantly improve and increase in that regard in the near term. So I'd say at this stage, it looks more like a beneficiary, the banking sector, of the rotation that we've seen in factors, and perhaps people feeling that value had gone too far rather than the start of a kind of brave new dawn.
Banu, do you want to jump in on this? Because we saw more problems at the Commerzbank, of course, last week as well. So the problems still exist in the sector, just whether we've got the appropriate valuation now to reflect some of those risks.
You know, for some time, I think we've had the fixed income market drive the equity market, right? So bond yields coming lower and growth going up, therefore, and value coming down. So the exact reverse happened in September. But if you sort of scratch the surface, inflation expectations didn't pick up at all. the entire move up in bond yields was real yields moving up. So it was a correction from August's oversold levels, but inflation expectations, which is eventually what you would want to see if Europe was genuinely getting out of a liquidity trap, which is what you need to see for European financials to sort of not just be a trade, but an investment. Not happening, right? 5-year inflation expectations still very low, industrial metals still very low, oil prices, 2 weeks back we were speaking about Saudi Arabia, back exactly where they were, and how quickly did they come back. So this actually speaks about demand, speaks about inflation expectations not picking up. This is a situation in which the value trade, but particularly European financials, and I would sort of put US financials in a slightly different bucket here, but European financials are probably a trade, not an investment. I do agree with Sunil on that.
Okay, we've got to wrap it up. Thanks so much for coming in, Sunil. Banu, you're going to stay with us. We will say goodbye to Sunil Krishnan, head of multi-asset funds at Aviva Investments. From repo market worries to rate-cutting pressures, we're going to pick up the conversation with Chicago Fed President Charles Evans. They describe him as a dove at the Fed, but how dovish is he about the direction for rates? We'll have that interview right after this.
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
If you haven't applied for sixth form this year, it's not too late to start. At Royal Greenwich Trust School, we have a limited number of sixth form places still available for students ready to start during October. From BTEC courses in engineering and construction to A-levels and our GCSE resit programme. Find out more about our exceptional facilities and welcoming school before all places are taken. Search Royal Greenwich Trust School today. Entry requirements apply for certain courses. To succeed in small business, you need technology that runs efficiently. When you partner with a Dell Small Business Technology Advisor, you get advice, one-on-one partnership, and tailored productivity solutions, including computers with Intel Core processors, servers, storage, networking, plus industry-leading monitors and accessories. It's how they help your small business make the most of every minute. To speak with an advisor today, call 0800 085 4878. That's 0800 085 4878.
For people who want to feel happier, stronger, fitter, get further, faster, better. For people who want to, but don't always manage to. It doesn't matter how you want to do it, who you want to do it with. It matters that you want to. Virgin Active. We'll find a way for you. Join in September and get 15% off each month on 12-month memberships. Visit virginactive.co.uk. Participating gyms. Terms and conditions apply.
Did someone say winter sun? It's that time again. And this year at Jet2 Holidays, we're saying Cyprus. On this incredible island, you get it all. A choice of 4- and 5-star hotels, amazing ancient ruins for culture-packed days out, hiking and cycling trails for active adventures, and plenty of blue flag beaches for soaking up that winter sun. Book Cyprus now with just a £60 deposit. Jet2 Holidays. Package holidays you can trust. APRA and ATOL protected, subject to availability and conditions.
Mr. Davis, to start your car insurance policy, you'll have to pay upfront £850 for the year in one single payment. How does that sound?
£850?
Yes, Mr. Davis.
In one go?
Yes, Mr. Davis.
Today?
Yes, Mr. Davis.
In one single payment?
Yes, Mr. Davis.
What?
With new Aviva Plus, we won't ask you to pay everything up front. Everyone pays monthly at no extra cost. New Aviva Plus. Car insurance the way it should be. Excludes Northern Ireland.
Let's have a good look at the market wall here. In your headlines this hour, European equities are searching for direction as investors await a key WTO ruling that could see the US slap Europe with tariffs on $11 billion worth of goods. The Chinese government warns of the harms of decoupling the world's two biggest economies following reports the US is considering blocking Chinese access to American capital markets. British Prime Minister Boris Johnson again refuses to rule out leaving the EU without a deal as Health Secretary Matt Hancock tells Steve that while he prefers an agreement, the threat of a no deal looms.
There are lots of different ways that you could end up leaving without a deal. But as I say, my preference is that we leave with a deal, and that's what we're working towards.
And we'll speak to Chicago Fed President Charles Evans in just a few moments' time as the US Central Bank's fix of the repo market faces a crucial test today. That as Mario Draghi says the ECB can do more but needs the support of an EU fiscal union. Not quite an exit interview, but we're not far away.